Good morning, everyone. So this is our Monday morning outlook, and on this session, we attempt to understand the market and to determine what the direction of the market is going to be for this week, right? So a whole lot of events happened last week. Let's start by looking at the economic calendar here. So we'll look at the event calendar for this week. So this week is the 13th. Today is the 13th all the way to the 17th. Let's see what we have on the calendar this week. So a whole lot happened last week. The government of the United States is still closed. The government is still closed. There's still this wrangling between the Democrats and the Republicans, as to who's responsible for the continued lockdown, the continued closure of government in the US. And the President of the United States taking the opportunity to fire some people. A whole lot is going on with the United States government. And because of that, we're noticing that we're not seeing a lot of the data should be hitting the wires. From NFP, we saw that we didn't have a analysts had to go back to the ADP non-farm payroll data to be able to, have a feel of what the employment market looks like at this time, right? So this week, you see a whole lot of events. Monday, you have a bank holiday in Japan, in Canada, and in the United States. So the United States, you have what they call the Columbus Day. For Canada, the Thanksgiving Day, right? Then tomorrow, Tuesday, we have a Federal Reserve Chairman for the Economics Association in the US in Philadelphia. So he's going to be speaking there. And note this, guys, whenever the Federal Reserve Chairman of the United States is speaking, investors and traders, and basically the entire market is listening for clues as to what he might say concerning interest rates, concerning employment, concerning the economy, and basically where he sees the economy going, right? With respect to mainly to monetary policy, right? That's what he's mainly looking at. So every time he speaks, the market's always listening for clues in this direction, right? So we're expecting to hear that also on Tuesday, because basically that is his position, and he will always say things that are related to that. Then also on Wednesday, we don't have much. On Thursday, we have a whole lot of data, a whole lot of data that should be hitting the market, but most of them are tentative. Tentative means that it's not sure. And why is it not sure? Because the government of the United States is still shut down. So if it's still shut down, then we will not have the data for PPI, we won't have the data for retail sales. So a whole lot is being driven by technical at this time and alternative data. A whole lot is being driven by technicals in the market and alternative data. So over the weekend, we see that Trump made huge tariff threats on China, and that really tanked the entire market, the market sold off. We see that gold benefited from that. Gold made a huge buy. Uh, we saw a sell-off in so many different assets. Bitcoin collapsed over 10%. Lots and lots of positions were liquidated. We saw a sell-off in oil. We saw a sell-off across different assets, risk assets. We saw a sell-off in S&P index. We saw a sell-off in the Nasdaq. We saw a sell-off in D40, right? Now, over the weekend also, Trump began to make a flip-flop, began to flip, right? Over the weekend, we see that Trump began to flip, and he began to do what we call tackle. Trump always chickens out. Now he's chickening out again, and then he's saying that he might actually not push, and he's saying that he might actually not implement what he has said about China, right? So if that's not going to happen, if he's actually not going to come through with those tariffs, that means the market is already pricing that in right now. You can see how that the market closed at this level. This is the Nasdaq. The market closed at this level, and then what happened? It gapped up and started going up. Now we're expecting it to rebound. It's almost rebounded to where it collapsed from, where it sold from last Friday. You see? So all of this is because the market is not at this time no longer believing that Trump is actually going to go through with what he said, right? That initial fear, initial skepticism is being removed from the market, right? So let's see what the market is likely looking like, what the market is looking like now and going into the week. Okay. This is the dollar index. So the dollar index has made a rally last week, mainly because of news that the Federal Reserve is being neutral. Is being neutral in terms of interest rate cuts. Everybody's expecting the Federal Reserve going to cut interest rate another twice, right? Making it 3 times this year in November and in December. But for now, the Federal Reserve's communication from the last FOMC minutes that we saw read out last week from the last FOMC meeting, we can see that the Federal Reserve is communicating. They're not completely categorical that they are going to be cutting interest rates. They are looking at the employment situation. They are looking at inflation. They can see that inflation has not been defeated fully. So what they're likely to do is what they've done before, which is stay higher for longer. Now they cut interest rate the other time, 25 basis points. Now there's a tendency that they might leave interest rates unchanged in the next couple of meetings, right? Because if inflation continues to resurge, if inflation is coming back, it will not be very smart for the Fed to be cutting interest rates at an aggressive pace, right? So those are the things that they are looking at, and they're trying to weigh these options. And that really led to a push up in the dollar last week. Of course, the dollar is expected to sell if there's an interest rate, if it's expected, the market is expecting that there's going to be an interest rate cut. So, but why is the dollar buying? So this is why the dollar bought last week. And then we're expecting it to pull back here after making this huge rally. We expect the dollar to pull back here. We expect the dollar to pull back from where it is to this level and then to this 98.20 level. 98.20 level is a 50% Fibonacci level. And then we should expect it to push up to around the $100 level. Okay, that will be a major resistance when price gets there. So this is where we'll be expecting. For those who are trading the dollar index, this will be a good area to be buying the dollar index. Okay. And then when we look at the Euro USD, we see a similar move on the Euro USD right here. Now the Euro USD turned bearish last week after it broke this 61% retracement. This support level here is basically a 61% retracement. We see that price broke out of it last week. So we see that we're expecting, usually in this situation, expect a change of direction, change of character. Okay, so now based on the analysis we've done, we expect price to push up into this 1.1660 level, more like a strong resistance level here, because that's the area of a breakout. And we expect that price is going to do that. And so we expect price to, bump into this level right here and then sell right? Now, this is basically the opposite of what we're seeing with the dollar index, and that's what we always see all the time. Euro USD tends to do the opposite of what the dollar index does. They have this almost perfect inverse correlation, right? So we're expecting that to happen. We're expecting price to push up there and then sell to the bottom here. Okay, so that will be an area for a sell. This 1.166 level would be a area for a strong sell. It's expected that price should sell from here. As for me, I will wait for price to get to this level before I start to sell. Okay, this is where we'll be expecting to sell. The 1.16600 resistance level is a Fibonacci level, which makes it a very significant level, right? Let's see what's going on with gold. Gold is breaking all-time highs again. Some of these analyses we did yesterday, we looked into the market yesterday, and we're able to see this. So gold was sitting somewhere around here. Gold was sitting somewhere around here yesterday. And then we had expected that gold was going to push down and then buy. Exactly what we analyzed or what happened yesterday. And then was market opened, that exact analysis played out excellently, and that gave a very strong move there. That is over 500 pips, literally crazy. That's over 500 pip move overnight. That was really massive. And we see that price has broken above the 4,050 level right now. Price is currently around the 4,080 level. 4,080 level, and the analysis says it's going to go to somewhere around the 4,000 and 4,100 level. And of course, we can see that price is just a short way away from there. It's not far anymore. Very likely going to get there any moment soon. Okay. So we expect very strong bullishness from gold, but at this time we do not see an area of a pullback. Okay, we don't see an area of a pullback, so we're going to be very cautious with entering gold trades at this time. We traded gold yesterday from last week from this level when we saw this pullback. This was a good area for a sell, for a buy basically. So if you wait for gold to make a pullback, we know that gold is very strongly bullish at this time. If you wait for gold to make a pullback, then you get a very high probability trade. Why? Because the gold at this time is very, very bullish. Very, very bullish. So you can be rest assured that you're going to find a very good buy on gold. But then you need to wait for it to pull back. If it doesn't pull back, you don't know how far it's going to go, right? So for gold, we will clearly not see any major move right now for us to get on a buy. The target remains bullish, right? But then we're going to have to wait for price to make a pullback, before we make a buy. So this initial analysis we did yesterday has already played out, over 500 pips there, and we'll be expecting to see another one. When price makes a pullback, then we'll be ready to buy again. Okay? But in the meantime, let go do what it will do. Then when it does what it will do, then we'll be ready to do what we will do as well. Then also Bitcoin literally liquidated people's accounts on Friday when Trump made a post. But we see that it hit a low around here, hit a major trend line on the daily chart, and then price have begun to rally from there. You can see it's been rallying. This morning has been rallying and rallying and rallying. We expect it to rally back to the all-time highs of 126,000. Yeah, 126,000. We expect to rally back to the all-time highs of 126,000. But then, even as it is right now, you can see this huge, massive impulse here. We haven't seen a pullback on that. We should see a pullback on that for us to get on a continuation, for us to catch a buy continuation. Okay, we should see a pullback coming soon or coming within the day or sometime where we'll be able to catch a buy continuation. Okay, it could be somewhere around here, for it to pull back to this level and then buy. That will be something to watch. Guys, it's always important to wait for price to make a pullback. When price makes a pullback, this is what we're expecting. We did this yesterday and we expected that price was going to go up. It started going up. Okay, so it's always advisable to wait for price to make a pullback, because if you don't wait for price to make a pullback, you might get trapped in a very bad situation in the market. You might get trapped in a very bad situation. So this is what I'm expecting to happen. This may not play out exactly like this, but I will need to use my Fibonacci will help in this, make this very clear. But then when we have a clear swing high here, that's when we'll be able to get this entry. We'll be able to look at and get a very good entry, potentially very good entry. Right? So we'll keep an eye on that right here, and then we'll see how that plays out within the course of the day. Right? What other instruments do we have? We're seeing that market is rebounding from last Friday's sell-off. massive sell-off. We've seen the market rebounding. You can see this is the S&P index. The S&P index literally collapsed from the top of 6,760, which was its all-time high, all the way down to the 6,500 level. And once the market opened this morning, market simply just gapped up, gapped, heavy gap up. Now we're expecting price to rally back to the 6,760 level again, right? So for now, there is no trade to take here. So we're going to just wait for that as well. So what I see in the market this morning is that there isn't much trades to take at this moment. There isn't much trades to take at this moment. Market is setting up for a market. The market is setting up for a sell on oil. The market is setting up for a sell on oil. Okay. The market is setting up for a sell on oil, on US oil. So we're expecting that we should be seeing some sort of a sell coming here. Yesterday we did this analysis and we said it will hit the $60 level, but it turns out that it might actually be turning around around the $61 level. So we're going to change this to $61. Likely, we should see price hitting the $61 level for a sell-off. Overall, oil remains very bearish. Oil remains very bearish from what we see in the market. We might see oil selling off all the way to the $51 level, but this pullback here, we need to catch this sell here first. This sell here price needs to bump into this area, the $61 level. Then we'll expect to see a sell-off from there on oil. Okay, so you see most of our trades, most of the analysis we're doing here are not really set up yet because there's just the beginning of the week. So there's a whole lot going on, a whole lot playing out as of now based on what happened last week. But eventually before the end of the day into tomorrow, we'll start to see good opportunities to enter our trades. Okay. So guys, always remember to risk no more than 2 to 3% of your capital on every trade. No trade is perfect. You can lose a trade. It's perfectly normal to lose a trade. But when you lose all your capital entering one trade that it becomes a problem. Always remember to risk more than 2 to 3% of your account on every trade and know that there's risk in trading. Okay. And then the way you mitigate against that risk is to use proper risk management. Proper risk management is what solves that risk problem in the market, and you'll be able to stay profitable. All right. Thank you very much, guys. We're going to be updating you more on the Telegram group. Please, if you're not on the Telegram group, make sure that you are on the Telegram group, and then we will give you further updates, trade analysis, trade ideas right on the Telegram group. Thank you, guys. See you guys on the next one.